Hello and welcome. You tune into Market Fatafat with me, Ankita Saxena, and with me as always is Snehi Shah. And for the next 1 hour, we'll take you through all the buzzers in trade today, why they are buzzing on the back of news flow or on the back of technical charts. But first, let's take stock of how the market is shaping up. Snehi, we are not doing very well right now. I mean, it's a quiet day in the market coming in. Nifty is, trading with cuts of 0.2%. Mid cap and small cap were outperforming the market. They still continue to outperform. In fact, they are trading in the green. Mid cap had turned absolutely flat, but it has managed to take up 93 points, and small cap is also trading up 0.2% as of now.
Absolutely, and this is where the only shade of green you're seeing when it comes to indices today, at least in the market when you talk about benchmarks, because it's the broader market that is showing some show of strength. But other than that, you have the markets that are absolutely flat right now. Remember, yesterday we closed comfortably above 24,800, but today that is not the case because we're struggling to reach that mark once again. Nifty Sensex both 0.2% lower. Nifty Bank and Nifty PSU Bank and Nifty Financial, these are the only packs of stocks that are doing pretty well. Other than that, you have metal, auto, IT, pharma, FMCG, media, realty and energy that are in the red. So that's how the market is shaping up right now.
Alright, so let's get going with all the stocks then that are in focus today. That's how the market is shaping up. That's the construct of the market. But the stocks that are in focus today, first up we'll talk about NBCC that's in focus today. That's reported its Q4 numbers, and we're seeing a jump of 29.4% on a year-on-year basis. As far as the net profit is concerned, it has come in at 176 crores for the fourth quarter, ended March 31st. That's up 136 crores in Q4 of FY24. And the revenue also increased 16.2% to 4,642 crores as against 3,996 crores from a period of a year ago. Now, at the operating level, the EBITDA also grew 19% on a year-on-year basis, coming in at 290 crores versus a 243 crores on a year-on-year basis. The margins also stood at 6.25% compared to 6% in the corresponding period of the previous fiscal. Now, the board of directors have also recommended a final dividend of 0.14 rupees, 14% per paid-up equity share of rupees 1 each for FY24-25. On the basis of good set of results coming in for NBCC, in fact, the stock is up in a way, soaring in trade with gains of over 7.5% in the back of strong performance coming in on Q4 results.
Okay, so very strong move coming in from NBCC. Let's talk about another high flyer in today's trade, and that's Sobha from the real estate pack. Mixed set of earnings coming in. For Q4 sales, we've seen a good jump, a 22% uptick on a year-on-year basis, coming in at 1,836 crores compared to 1,500 crores this time last year. Revenue has gone up 62.7%. Net profit, what a jump over there. A 41 crore figure coming in versus 7 crore this time last year. Almost six times the jump coming in for net profit. EBITDA has also come in at 94 crore rupees compared to 62 crore rupees, which is up 52%. EBITDA margins, however, have taken a little bit of a knock at 7.6% compared to 8.1%, which is down 53 bips on a year-on-year basis. But good move coming in when it comes to their area sold, collections, realizations, as well as the sales, the pre-sales numbers coming in on a year-on-year basis. On the back of that, Sobha has simmered from the day's highest point. It was up almost 5% at one point, but nonetheless a 3.5% uptick is what we are seeing on Sobha as we speak. But moving on, let's also welcome on board. We have Kanishka, who's joining us from the in-house research team. And Kanishka, hi, you picked out Engineers India for us as your first stock. Take us through what the earnings fine print look like.
Absolutely. So Engineers India has delivered a standout performance in Q4. Revenue surged more than 25% on a year-on-year basis to 1,010 crore rupees, while the net profit that more than doubled, soaring 142% to 280 crore rupees. Now, operationally, EBITDA nearly jumped 4 times to 301 crore rupees, lifting margins from 9.6% to 29.8% this time. Now, according to the company's management, a strategic shift towards high-margin consultancy projects and timely execution of all the ongoing projects are the key factors that are driving this growth. Now, on the order front, Engineers India has clocked an all-time high FY25 order inflow of 8,214 crore rupees, with over half from consultancy and a major push into energy-efficient infra as well. Now, the total order book now stands at close to 12,000 crore rupees. The management remains bullish, expecting a 20 to 25% top-line growth in FY26 with sustained margins as well. Now, the company is also expanding in Saudi Arabia and betting big on renewables, green hydrogen and sustainable aviation fuel. Now, following the results, the stock is gaining for the second straight day and is up almost 6% at this point.
All right, that's Engineers India. But keeping with that, Engineers India, that stock is up and about in today's trading session on a stellar show for Q4, of course. But going forward, the management also says that the margins are sustainable at current levels, also shedding light on the project pipeline over the coming months. Let's go across and listen in.
We have a good order inflow in this financial year of about 1,300 crores, 1,320 crores, and which brings us to an order book as on today of about 12,400 crores. So we are growing our order book quarter on quarter, year on year, and this will translate into good top line growth as well as very good margins as we go along. There will be some polymer projects also which we will be completing, some refinery projects also which we'll be completing, and some plant pipeline projects, some infrastructure projects, data center projects. So there is a lot of activity which is going to happen in the next 6 to 9 months, which will complete, this fiscal. So we see a huge growth in terms of the execution of these projects, even in infrastructure segment.
Okay, that's the word coming in from the management of Engineers India. That stock up almost 7% as we speak. But let's shift focus to Adani Ports. That stock is in focus because they have successfully raised 5,000 crores through a 15-year non-convertible debenture. This is backed by the company's strong financials and AAA stable domestic credit rating. The issue locked in a competitive coupon rate of 7.75% per annum and was fully subscribed to by LIC. Anurag Joshi is joining us with the latest details on this. Anurag.
Adani Ports, which just this month opened the Vidinium port in Kerala, has closed a 5,000 crore rupee 15-year non-convertible bond issue. Now, Adani Port has raised the NCD issue at 7.75% annual coupon, and Life Insurance Corporation was the sole investor in the sale. This is the longest tenor debt security issuance by Adani Ports. The proceeds from the issue will be used to buy back Adani Ports dollar bonds, and the company's board is meeting on May 31st to decide on the buyback plan of the dollar bonds. After the bond issue, the average debt maturity for the company that's got extended to over 6 years from 4.8 years earlier.
What is next? Thank you so much, Anurag, for joining us with the details of that. But let's get on board Ajit Mishra, who's the VP Research Delegate Broking, who's joining us now. Hi, Ajit. Thank you so much for taking the time out and joining us on the technicals. First up, Ajit, let's pick your first stock, which is Bank of India. Tell us what do you see on the charts of Bank of India? Because if I can see the chart today itself, it's doing pretty well. It's up 2%, and in the last 6 months also, it has been outperforming. It's up 10% in the last 6 months. Tell us, do you see this positive momentum to continue, especially from the PSU banking space?
Hi, good afternoon. So yes, in fact, after almost 2 weeks of consolidation and almost a month-long consolidation, we are eyeing that, especially the banking could trigger the next leg of the up move in the markets. And while the private banking majors are, sitting on the sidelines around their record highs in a very tight range, we are seeing a catch-up move in the PSU pack. So Bank of India, PNB, Canara Bank, all these stocks alongside with SBI is inching gradually higher. After this recent breakout, we expect Bank of India to inch gradually towards 130-35 levels in the near future. So here definitely one can look for fresh long opportunities with stop loss at 115.
All right, fresh opportunities in Bank of India. But let's moving on from Bank of India to Alkem Labs. Now, Alkem Labs is in focus today. In fact, the share dropped 4% after the Q4 EBITDA margin contracted 12.14%. It came out with the Q4 results. And as far as the EBITDA is concerned, it contracted 12%. And on the back of that, the stock is reacting in trade. It's down almost 4% in trade. The company also reported a net profit of nearly 306 crores for the Q4 for the fiscal year 2025. And this marks a 4.2% rise from the earlier 294 crores net profit reported in the corresponding quarter of the previous financial year. And the company's total revenue from operations rose 7.1% on a year-on-year basis, coming in at 3,143 crores for the quarter. However, the EBITDA margin, like I mentioned, saw a contraction of 14.4% from an earlier 13.7% in Q4 of FY24. And along with this Q4 results, Alkem Labs has also announced a final dividend of 8 rupees per equity share for the financial year 2025. But on the back of the decline coming in on the EBITDA margins, Alkem Lab is declining in trade with cuts of more than 3.5%.
Okay, so stock under pressure today. Let's move on and talk about another stock that's under deep pressure today. That's Amara Raja. A weak set of Q4 numbers coming in, wherein the revenue has come in at 3,060 crores, which is up 5.2% on a year-on-year basis. But if you take a look at the other financials, they've taken a knock on a year-on-year basis, because let's take a look at what the net profit is doing. 162 crores compared to 230 crores, which is down 30% on a year-on-year basis. EBITDA has come in at 341 crores, which is down 17% year-on-year. EBITDA margins have also seen a little bit of a contraction, coming in at 11.1% compared to 14.1%, and the board has approved dividend of 5.2 rupees per share. But these numbers have taken a knock on a year-on-year basis. On the back of that, Amara Raja is lower by 5% as we speak, at the day's lowest point right now.
All right, Amara Raja, the day's lowest point. But another stock that is taking it on the chin today is Mazga Dogs Kanishka. This is another stock which has reported a muted set of Q4 results. Take us through what does the report card look like for Mazga.
Absolutely. Mazga Dock has reported quite a weak set of numbers, while revenue did grow modestly by 2.3% to 3,174 crore rupees. Net profit, that dropped sharply by 51% to 325 crore rupees. EBITDA plunged 83%, while with margin sliding to just 2.8%. This is from 6.9% in the year-ago period. Now, the company attributes this to a tenfold rise in subcontracting costs and losses in two key contracts. That's one with the Coast Guard and another in Denmark, which has prompted them to have a provision of 532 crore rupees. Now, despite this weak quarter, the full year picture remains fairly good. Now, for FY25, revenue rose about 21% and net profit, that jumped nearly 26%, with EBITDA up 46% and margin expanding to 18% for the year. Now, Mazga Dock has an order book of over 32,000 crore rupees, and the management is expecting FY26 revenue growth to come in the 12 to 15% range, with margins expected between 16 to 18%. Now, the key upcoming triggers include deliveries of 317A boats to the Indian Navy and potential orders under the P75I submarine and next-gen destroyer programs. Now, following that weak set of Q4 numbers specifically, the stock is taking a hit and is down about 6.5% in trade today.
Okay, so that stock lower and not doing well in today's trade. But let's move on. And Ajay, Federal Bank is the stock that you've picked out for us on the charts. Last 1 year, the stock gave us gains of more than 20 to 25%. But ever since then, it's been lackluster for the stock, absolutely flat on the charts. Tell us what are the next levels you're spotting, because last 6 months itself, the stock has taken a 4% knock.
Yeah, that's right. And in fact, we are anticipating that the banking could lead from here on, and we have list of stocks within the banking basket also, which are low beta in nature. And Federal Bank is one such name that it usually see a very gradual decline during the corrective phase, and witnesses a strong and steady up move whenever we see momentum in the banking index. So after almost 2.5 months of consolidation, it looks set for the next level of move. So it's basically a buying opportunities for those who are sitting on the sidelines and want something to be, invest in the banking space, which is less volatile. So like PSUs, we all know that they are very volatile in nature. So somebody who is slightly risk averse can consider Federal Bank at current levels. We believe that 195.98 is a very strong base for Federal Bank now. And once we break this 205 area, probably the stock can inch towards its record highs, means 215 and 220 levels. It's a good risk to reward, for considering fresh long position in Federal Bank at current levels.
All right, so that's Federal Bank on the charts. But let's move on to the next candidate, an earnings candidate again, Varroc Engineering, that is in focus today on the back of its Q4 results. In fact, the stock was up another 7% in early trade, has given up those morning gains, but nonetheless, it's trading with gains of 4+%. Now, the company's EBITDA has seen the margin stood at 10.5%, marking a decrease of approximately 70 basis points on a year-on-year basis. However, it has surpassed the consensus estimates of what the street was penciling in of around 50 basis points. Now, Varroc Engineering's revenue grew by 11% on a year-on-year basis, with Indian operations contributing a 13% increase, although the overseas operations remained rather challenging due to the macroeconomic weaknesses. Now, ICICI Securities has anticipated a gradual recovery in Varroc's overseas business over the next 1 to 2 years, bolstered by the recent order wins. Now, the firm has projected a 10% revenue compounded annual growth rate, particularly driven by the two-wheeler segment and the ramp-up in the new order wins. Now, the brokerage also predicts an improvement in the EBITDA margins to approximately 10.4% in FY26 and 10.8% in FY27. ICICI Securities is also maintaining a buy call on Varroc Engineering with a revised target price of 610 rupees based on a discounted cash flow model. Also, the board is mulling a fundraising worth 500 crores via NCDs and have also recommended a dividend of 1 rupees per equity share as the final dividend. Just on the back of that, Varroc Engineering is in focus.
Okay, and that stock is doing pretty well. Lots of news flow when it comes to Varroc Engineering other than its earnings as well. But let's move on and talk about Bajaj Auto, the second last Nifty company to come out with its earnings yesterday. Remember, Apollo Hospitals today will be coming out with their earnings. That's going to be the last company. But while we're talking about Bajaj Auto, it's been an inline set of numbers coming in on the standalone year-on-year basis. Revenue was up 6% year-on-year, net profit up 6% as well, and same with EBITDA. You have margins that came at 20.2% compared to 20.1% on a year-on-year basis. So very inline set of numbers coming in. Despite this, why is the stock doing badly in today's trade? A 2.5% fall coming in because for quarter 4, revenue has missed double-digit growth due to the temporary suspension of KTM exports. And apart from this, you have 6 brokerage downgrades coming in, and one apart from them also maintaining their sell rating. Let's go through what the brokerage notes are. Morgan Stanley has downgraded the stock to an equal weight from overweight, cut the target price to 9,117 from 9,128 earlier. JP Morgan downgrade to neutral from overweight, cut the target price to 9,255. Axis Capital has downgraded to sell from reduce and target price maintained at 7,300. DAM Capital has downgraded the stock to sell from buy. ICICI Securities has downgraded from add from buy. So downgrade coming over there, and Nirmal Bang has downgraded the stock to a hold rating as well. Kotak Institutional maintains its sell call on the stock. So very bearish, very negative brokerage notes coming in, and despite an inline set of numbers, the stock is taking a hit of 2.5% as we speak.
Alright, so that stock is down in trade today. But coming to you, Ajit, Asian Paints is the name that you have picked out for us. Now let's look at the chart for Asian Paints. Even that is down 1.3%. In fact, in the last 6 odd months, also it has given, it hasn't done much for the investors. Do you see further breakdown on this stock, or do you see a reversal coming in on the charts?
Yeah, that's right. In fact, when the markets have recovered very strongly in the last 2 months, we have a handful of stocks which are still struggling, and Asian Paint is one such name that it made an attempt of recovery, but it failed to cross its major averages around the daily chart around 2,500 mark, and since then we are seeing again a gradual dip. So at current levels, it seems like a fresh shorting opportunity because the stock might retest its previous swing lows, or maybe lower. So maybe close to around 21,550 is something that the stock might test in the near future. So with stop at 23,10 is something that one can go fresh short in Asian Paints, considering that the market is still in consolidation, and maintaining position in both sides is something which is recommended.
Okay, so that's a strategy coming in on Asian Paints. But on that note, we'll slip into a very short break and bring you more buzzers on the other side when we return. So you stay tuned. Hi there, welcome back to Market Fatafat. You're watching the show with us on ET Now, a show where we're bringing you all the big buzzers in today's trade. Let's keep it going with all the big buzzers, and while we are talking about stocks that are making big moves, Kanishka, Ola Electric is a stock that you've picked out for us. Very weak set of earnings is what we understand. The stock is lower by 5.5%.
Right, very weak set of numbers coming in from Ola Electric with widening losses. Actually, revenue plunged 62% on a year-on-year basis to 611 crore rupees, while net loss more than doubled to 870 crore rupees. The EBITDA loss also widened to 695 crore rupees from 312 crore rupees a year ago, which reflects continued pressure on profitability. However, the company did make some operational improvement, with gross margins improving to 20.5% in FY25, which is up from 14.8% last year. Now, looking ahead, Ola is betting big on its next-gen technology and its its in-house Bharat Cell is in final testing with phased commercial rollout expected in FY26. The company is also guiding for a 35% gross margin in Q2 of FY26, which would be helped by PLI benefits on its Gen 3 platform. The roadmap also includes a push towards auto segment and EBITDA profitability in FY26. Now, following that weak set of numbers, as you mentioned, the stock is down more than 5% in trade today.
All right, moving on then from Ola Electric, that's declining in trade, to the next counter, which is declining in trade. That's Ipca Lab, that it's posted its Q4 numbers, but even in the technicals, it's below its 200 DMA right now. It's trading with cuts of 3% right now. But let's take a look at what the results look like for Ipca Lab. As far as the company consolidated net profit is concerned, that increased 13.8% on a year-on-year basis to 67 crores during the March 2025 quarter. It had reported a net profit of 59 crores in the corresponding quarter of the previous fiscal. And during the March 2025 quarter, the revenue from operations rose 10.5% on a year-on-year basis to 2,247 crores as compared to 2,033 crores in a year-ago period. Now, Ipca also said that its EBITDA had surged 35% on a year-on-year basis to 409 crores from an earlier 304 crores logged in a year-ago period. Now, the net profit also stood at 738 crores for 2024-25 fiscal, as against 547 crores in FY25, which is up 34.9%. Now, the company's board has also recommended a final dividend of 2 rupees per share for the year ended 31st March 2025. But Ipca Lab is currently declining away in trade with cuts of 3.3%.
Okay, so Ipca Labs in pressure today on the back of its Q4 earnings. But let's move on. And Ajit, Colgate-Palmolive. Colgate is the stock that you've picked out for us. Remember, when the earnings came, they were rather mixed. And if you take a look at Colgate on the charts as well, let's pull up the charts for Colgate, because last 3 months, only a 0.5% uptick coming in. So what are your next levels that you're spotting for the stock? Because 2477 is what the stock is right now.
Yeah, so basically, if you see that the FMCG as a pack is struggling, means if you exclude a couple of names like Marico, Britannia, they are holding strong or maintaining at the higher end after this recent surge. But Colgate-Palmolive, after this decline below its major averages, we are still not seeing any sign of reversal, and probably close to around 2300, 2340 is something that the stock might test in the near future. So yes, in fact, at current levels also something someone can look to go short with 2520 as a stop loss and 2340 as a positioning target.
Okay, those are the targets to watch out for on Colgate-Palmolive. Let's move on and talk about a stock that is doing pretty okay in today's trade on the back of a positive news flow, and that's Alembic Pharma, because today the company has announced that they have received the final US FDA approval for their abbreviated new drug application, which is the ANDA, called bosutinib tablets for 100 milligrams and 500 milligrams as well. Now, these tablets are indicated for the treatment of adult patients with chronic and accelerated leukemia with resistance or intolerance to prior therapy. These tablets in the form of 100 milligram and 500 milligram have an estimated market size of $291 million for 12 months ending March 2025, according to IQVIA data. So, positive news flow coming in for Alembic Pharma. There was a sharp spike in the stock when this news came out. It has simmered down from those highs, but nonetheless, a 1.3% gain is what we're seeing on that stock as we speak.
All right, with that, we completely timed out in this edition of Fatafat. Ajit and Kanishka, thank you so much for taking the time out and joining us. As we wrap up this edition, we're leaving you with this news piece coming in that India is ramping up the FTA talks with European Union. ET now learns Commerce Minister Piyush Goyal will visit France and Italy next week with a business delegation, as both sides push to seal a deal by the end of 2025. My colleague Sumita Kharir is joining in with the exclusive details of that story. Let's take a look.
Right, India and the European Union concluded their 11th round of talks recently. These talks got concluded on May 16th, and these talks are gaining momentum and are progressing well. In fact, both sides are aiming at a comprehensive trade deal by the end of 2025. India and the European Union are eyeing deeper supply chain integration and long-term structural growth. But what was discussed as far as the recently held talks are concerned? Well, exclusive sources are telling ET now the digital trade complexities were acknowledged. These discussions markets remain sensitive. IPR synergy is expected between India and the European Union. The European Union is recognizing progress that's been made, and it is looking at a synergy on development and commercial aspects of IPR. Now, EU is viewing the India-UK FTA as an accelerator for India-EU trade deal to be processed further. Agriculture sector sensitivities were respected by EU negotiators. The EU is also acknowledging Indian SMEs' concerns on regulatory compliance. There were concerns that were raised over the rules of origin verification, given that there are verification differences that remain between India and the European Union. Both sides are looking at a focused approach to prioritize essential areas for a faster deal conclusion, although an early harvest deal is also possible. In fact, services and investment offers are likely to be exchanged in the month of June. Remember, this is coming in even as the Commerce Minister Piyush Goyal is leading a business delegation to France and Italy next week. We're given to understand that a separate business delegation is also likely to visit Switzerland. Amidst those developments, the India-EU trade talks are picking momentum.
Okay, so that's the latest on India-EU FTA negotiations. Thanks, Samita, for joining us with all of those details, and we'll bring you up to speed as and when we have developments on this story as well. But on that note, we'll wrap it up on this edition of Market Fatafat. From everyone that put this show together, thanks so much for tuning in. But stay tuned to 18 now, because closing trades is up next.